That's right, you're watching Africa Trade and Business. I'm Bronwyn Seaborn. Well, businesses operating in the SME space have had to face a few headwinds over the past years, and a rising interest rate environment coupled with disrupted supply chains and interrupted power present new challenges. We'll be discussing the current operating environment, its challenges and opportunities with Preshan Rambridge and Sejeng Matlhako from Absa CIB. But first, your news making headlines across the continent. Namibia has banned the export of unprocessed critical minerals. That's as the state seeks to profit from increased global demand for essential battery materials like lithium. Amid the green energy push, the country has significant lithium deposits, which is vital for renewable energy storage. It also has an abundance of rare earth minerals, which are needed for permanent magnets in the batteries of electric cars and wind turbines. Namibia is not the first African nation to do this. Zimbabwe, also a lithium producer, banned all exports last December. It's only allowing concentrates to be shipped out and says the plan is to eventually have miners operating in the country produce battery-grade lithium locally. Tanzania's central bank has imposed a raft of restrictions on foreign currency dealings. That's as it looks to curb a shortage of dollars and safeguard the stability of the country's financial system. Measures include the banning of unlicensed international foreign currency brokers and a requirement that all forex transactions exceeding $1 million in the retail market be traded within the interbank foreign exchange market at the prevailing rate. The move comes after a decline in foreign reserves and a shortage of hard currency in the banking system. Kenya, Nigeria, Malawi and Zimbabwe have also been dealing with dollar shortages as they use it to pay for imports and foreign debts. Ethiopia's overall spending is expected to tick up. In his budget speech, Finance Minister Ahmed Shide said a near 2% rise is on the cards in the next fiscal year, and that should see total spend come at nearly $15 billion. Shide added that the economy is set to expand by 7.9% from 7.5% previously. The impacts of the pandemic, a 2-year war in the northern region, along with droughts, floods and locust invasions in parts of the country are still being felt by the Ethiopian economy. But Shide says in the next couple of years, the economy will be free from the chaos and will be fully healthy. Ghanaian labour unions have asked government for some time to mull over a pension restructuring offer. The West African nation is looking to extend the maturity periods of CD currency bonds that the pension funds hold in exchange for higher interest rate payments. The move is part of efforts to save billions in near-term debt payments under a loan deal from the International Monetary Fund. The majority of eligible holders of Ghana's local bonds participated in a domestic debt exchange in February. The pension funds, though, were exempted after unions threatened to strike, but have now been offered their own deal. A decision on the proposal is expected by the end of June. Well, it's a well-known concept. Support small and medium enterprises and the economy will grow. And right now, the opportunities for SMEs are vast, given that the annual trade finance gap on the African continent sits at $110 billion. But the challenges are just as vast. So joining me to unpack the detail of the situation is Preshan Rambridge and Sejeng Matlhako. They are both from Absa and join me now in studio. Thank you both for your time today. So Preshan, I'm going to start off with you because it is a really challenging time for SMEs because there are supply chain bottlenecks, there are rising cost pressures, there are rising interest rates, and that all really weighing on SMEs at this time. And that's still coming after we've had the impact of COVID-19. So what are you rating, or how are you rating the resilience of SMEs right now?
No, thank you so much for that question. I think, South Africa in general is a resilient country. We've been through ups and downs as a nation. We've seen it in the African continent as well. We go through challenges, but somehow we tend to just rise above those challenges. And it's quite the same for SMEs on the African continent and in South Africa as well. We see on a frequent basis that SMEs go through challenges, and entrepreneurs are needing to just reinvent themselves, reinvent how they come up with solutions, reinvent themselves insofar as how they improve operations, so that, you know, from a cost point of view, they're able to curb cost, but also on the innovation side, how do they come up with new ways to service the market in order to survive?
Sejeng, as Preshan saying there, if you are a resilient business, as it does seem there is this resilience coming through in the sector, there must be a lot of opportunity for those businesses to grab hold of, right?
Absolutely. I mean, one of the first things I do want to say about SMEs in the African continent holistically is how I term it that they are the heartbeat of the economy, and that's really the foundation of where we're actually going to get the growth as an economy or as a continent is actually from supporting SMEs, right? So if you look at issues that we are facing right now, or that SMEs are facing and all of us are facing holistically, for instance, renewable energy, I mean, that is something that is affecting everybody. And I think the opportunity there that we have as a business, as a financier, is the ability to be able to help our clients with regards to financing as it relates to renewable energy. I know Preshan would have maybe touched or will probably touch on the green energy finance that we are having as an institution to help our clients to actually try and rise above. And that for me is what resilience is all about, ensuring that we are partnering with our clients to ensure that they actually rise above the particular challenges that we're facing in the economy.
You are right, Preshan. We're going to get into that green energy situation in just a bit. But before we move on to that, you know, I mentioned the effect of COVID-19 on businesses, particularly SMEs that had to take on additional costs, you know, as a result of that. And that could skew their balance sheets to an extent. So when you sit down and you look at the potential of these SME businesses that you want to help grow, that you want to fund, how do you do that right now when you've got COVID-19 perhaps skewing the numbers a little bit, but you still want to perhaps see the potential without looking too much in the rearview mirror?
Brandon, that's such an important question, right? Because I have noticed, or I've observed, that historically there's been this notion of assessing a client's potential on a scoring model, right? And to the point that you've just made, on a scoring model, if you're looking at a client that's gone through COVID and there's been a skewing in terms of the trend, it becomes very difficult for us to say, or for any risk manager for that matter, to say, I'm going to lend to this business. So what do we do? What should we be doing, and what are we doing at this point in time is to make sure that, number one, we're staying very close in front of our clients. Number two, we are having those direct conversations with the clients to actually understand the skewedness, as you've put it, into the numbers and so forth. So my thing is, assessing a business in this particular era just based on scoring alone is not necessarily sufficient. It is important to really sit down and have that conversation, understand, and then come back to what types of solutions, what types of products can we put in place to try and help this client, given what we've now understood to be the situation.
Well, trying to help clients, and that gets us to the point on green energy, Preshan, because we can't sit here in South Africa and talk about small and medium enterprises without bringing the power crisis as a discussion point into the conversation, because it really does cause strain. Most SMEs are having to generate their own power at the moment, be that through generators, looking at solar, and the costs associated with all of that quite significant. Are you seeing it as a particularly heavy burden to the SME sector at the moment, and what effect is that having on the growth of the sector in general?
Yeah, thanks a lot, Bronwyn. I think the energy situation is weighing extremely heavy on the SMEs because they are not in a position to be able to fork out large amounts of funds to be able to sustain themselves through load shedding periods. And we know stage 6 is, you know, anything between 9 and 11.5 hours a day. And when that happens to an SME, what happens is they are forced to close their doors. And so it has a knock-on effect on, one, the ability to generate revenue, and two, to then cover cost. And so it puts at risk, you know, just the sustainability and the affordability of SMEs. And so what we have recently announced is a 50 million rand subsidy, up to 50 million rand subsidy for SMEs, where if an SME is wanting to invest in alternate energy to, sustain their businesses, we could give an SME up to 10%, maximum, 50,000 rand, insofar as a subsidy towards that installation, and in turn putting back cash flow into their business.
Which just helps the sector all round, right? And the
Absolutely.
situation
Absolutely.
to a large extent. Unfortunately, we have run out of time, so we have to leave it there. But we're sure to have you back soon to discuss the SME sector again, because it's a vibrant one that's ever changing. But for today, thank you so much for your time.
Thank you so much.
Thank you, Brandon.
That was Preshan Rambridge, the Regional Segment Head for SME Relationship Banking, Gauteng South, and Sejeng Matlhako, Regional Head for Transactional Banking Sales, and they both are from Absa. And that's where we leave things for this week's episode of Africa Trade and Business. From me, Bronwyn Seaborn, and the rest of the team, it's goodbye for now.